Well, let's just dive right into this explainer. Today, we're demystifying a really rigorous system designed to engineer absolute discipline in high-pressure trading. Look, if you've ever felt the rush of the markets, you know exactly how chaotic it can get, right? So we're going to unpack the Prop Trader Pro framework, or PTPF for short. It's essentially a structural masterpiece built to tame all that chaos. Process over outcome, discipline over emotion, consistency over everything. This motto really sets the tone for everything we're about to cover. I mean, think about those words for a second. In trading, we're usually so obsessively focused on the outcome, the money, the win, the loss. But this framework, it insists on a total paradigm shift. It's the ultimate battle of system over self. By prioritizing your process and your discipline over those fleeting emotions, the outcomes actually just start to take care of themselves. So, here's our agenda for today's explainer. We're going to cover discipline over emotional trading, the symbiotic learning loop, manual versus automated execution, the daily trading flowchart, and finally, the account lifecycle path. All right, let's jump in. Section 1, discipline over emotional trading. Let's talk about conquering trading bias. Okay, so the absolutely crucial point here is that this framework isn't some magical set of indicators. It's not going to tell you exactly when to buy or sell a specific asset. Instead, it's a behavioral system. It's grounded heavily in behavioral finance, cognitive psychology, and performance science. The whole point is to develop you, the trader. It builds up your mental resilience and your situational awareness so that whatever strategy you actually decide to use stands a real chance of succeeding. Have you ever jumped into a trade way too early just because of FOMO? Or actually, have you ever moved a stop loss further away out of sheer dread of taking a loss? I mean, we all have, right? Notice the specific behavioral feedback the system tracks. It actively flags a premature entry when you just couldn't wait for confirmation, and it slaps a warning on emotional intervention. On the flip side, it validates you when you exhibit disciplined execution. Basically, it holds up a mirror to your absolute worst habits. Moving on to Section 2, the symbiotic learning loop, which is all about continuous improvement. Instead of that random shoot-from-the-hip style of trading, the framework literally forces you through these rigid, interconnected steps. You analyze the market, you execute the plan, you obsessively journal every single emotion and decision, and then you absorb the feedback. It ensures that every decision you make is calculated, reviewed, and then utilized to make your very next decision infinitely better. And here we see the full symbiotic learning loop in action. Notice how your real-time analysis feeds right into strict trade planning, which then drives both your manual and automated execution. Then, and this is the key part, you log everything in your journal, which generates these really deep visual analytics. Those analytics feed right back into your refined market analysis. It's basically a closed-loop system of just perpetual refinement. All right, Section 3, manual versus automated execution. We call this the dual execution model. Think about how incredibly powerful this is. The framework runs your messy, emotional, human execution side by side with a cold, rule-based, automated execution of the exact same trade plan. You're literally competing against a robot version of your own strategy. The automated side operates with zero emotional bias, which creates this absolutely perfect, unarguable baseline for comparison. What makes this dual execution a real game changer is that it gives you undeniable proof of exactly where your emotions are costing you money. I mean, did the automated system exit exactly at the target while you panicked and sold early? Or maybe you manually closed a losing trade properly while the automated system ended up hitting a catastrophic stop loss. You get to see literally dollar for dollar the cost of your hesitation versus the value of your intuition. This brings us to Section 4, the daily trading flowchart. Let's get into end-to-end risk control. So, how do you control risk every single day? This is the million-dollar question, right? When the markets open, those charts are flashing red and green and the pressure spikes. Well, willpower alone is just not going to cut it. You absolutely need a predefined mechanism to protect your trading capital from yourself. The answer is defining these strict, non-negotiable parameters before you even think about looking at a live chart. You've got to lock in your maximum allowable daily loss, your exact profit targets, and even exactly how many trades you're permitted to take. By drawing these lines in the sand beforehand, you completely remove the burden of making those high-stakes risk decisions while you're under immense stress. Let's walk through this daily flowchart. It acts as a totally ruthless yes-no decision tree that dictates whether you are, within the framework, allowed to keep trading. Look at the constant checks here. Is the daily drawdown greater than or equal to the max daily drawdown? If yes, boom, the flowchart sends you straight to stop trading. Have you hit your target profit? If yes, stop trading. It forces you to stand aside the exact second you violate a parameter or achieve your goal. Stripping that complex graphic down to its core, your daily workflow basically becomes a factory line of checks and balances. You start with your pre-market checks. Then you enter the actual trade loop, where you're constantly checking those real-time parameters. Finally, you hit the end-of-day evaluation. Any rule violations, like taking way too many trades or blowing past your drawdown limit, result in an immediate fail for the day. It's strict for sure, but it's deeply necessary for survival. And that leads us to our final section, Section 5, the account lifecycle path, from evaluation to mastery. By strictly adhering to the framework, you walk this exact timeline. You don't just jump straight into massive wealth. You start at evaluation, just proving you can follow the rules. Once you prove that, you become funded. From there, your consistent discipline allows for scaling, which eventually leads to real payouts. The ultimate goal down at the end is mastery, moving from a volatile amateur to demonstrating truly sustainable long-term growth. Your entire journey rests firmly on these 5 pillars: process, discipline, consistency, adaptability, and growth. These pillars constantly remind us of the core educational philosophy here. We teach process, not prediction. We build discipline, not dependency. It's all about evolving as a professional over time, not just chasing short-term lucky wins. So when the pressure hits tomorrow, will you let your emotions take the wheel, or will you surrender to the system? I want to leave you with that provocative thought to chew on. Your next session is coming up. Are you going to be the unpredictable human or the disciplined executor of a proven process? Thank you so much for joining me for this explainer on mastering the ultimate trading framework.